President Obama nominated Federal Reserve Vice Chair Janet Yellen to replace Ben Bernanke as the next chairman. Is this the right time for what I call the Queen of the Doves, who will eventually, by the way, face a massive stimulus exit strategy? Here now we have Republican Congressman Kevin Brady. He's the chairman of the Joint Economic Committee, and CNBC contributor Jim Pethokoukis from the American Enterprise Institute, who has become Ms. Yellen's strongest supporter across the country. But seniority first. I go to Mr. Brady. Is Janet Yellen the right person for this job, sir?
Well, she's certainly qualified. I think her years at the Fed, her qualifications, I think her integrity professionally are all very solid qualifications. The question is about the policies that she'll pursue as chairman. Clearly, I think we'll see Chairman Bernanke's policies perhaps expanded even further, certainly lengthened. I don't think that's the right solution to what ails this economy. I actually think right now the Fed ought to be very clearly laying out both the tapering, the exit strategy, because Wall Street's juiced up. It's doing great. Main Street still struggling. 4 years after the recession ended, I don't think the Fed has the right cure.
JP, let me read you something from John Taylor of the Taylor Rule. Right. About Janet Yellen. He said, this is a quote about Yellen. This is a quote that Yellen made. In normal times, when the economy is buffeted by typical shocks, simple rules come pretty close to approximating optimal policies. All right. But a year and a half ago, she said, times are by no means normal now, and the simple rules that perform well under ordinary circumstances just won't perform well now. Does that concern you at all?
Well, I think actually the Fed has actually moved a little bit more of late more toward a rules-based strategy with their economic thresholds. They don't have the kind of clear, simple. I would disagree with her. I think a clear, simple rule, as you know, my preference is targeting the level of nominal gross domestic product would be the ideal rule. I think we need to get back to a rules-based strategy. I just don't think it's sort of the deflationary strategy that the congressman might prefer. Listen, I don't want Janet Yellen as my U.S. Treasury Secretary. I'm not sure she'd be the right person for the job in 1979. But right now, with inflation at 1% and the real unemployment rate closer to 10, I want someone who's going to put a thumb on the scale for the employment part of the dual mandate.
Well, we've got just some quick numbers. Inflation is about 1.5%, M2 growth 7%, nominal GDP 3.5%, unemployment 7.25%. Congressman Brady, what about things like the dollar or commodity indexes or the price of gold? You have written about this from the Joint Economic Committee, that you like having market-based price rules. Do you think Ms. Yellen will pay any attention to that?
Well, I would hope so, but I don't think immediately she will. I think she really is focused on continuing the QE. She really wants to focus on the employment mandate, but there's only so much the Fed can do. And two things. I think it is actually creating more uncertainty in the marketplace. Certainly, we live in this opposite world where bad jobs numbers actually create a rally on Wall Street. That's not a healthy signal. And the truth is, the Fed can only do so much in employment. I think a sound dollar, price stability over time, and that clear signal actually creates the strongest foundation for economic growth. And by the way, the Fed still should be turning to Congress and saying, and the president saying, we have done too much. It's time for you to address the fiscal issues.
All right. Go ahead, Jimmy. Go ahead.
Well, you know, we have an example of the kind of central bank the congressman would like. And that's the European Central Bank, which has more or less stayed on the sidelines as the European economy has collapsed. Nominal GDP has collapsed, which has created the debt crisis. Why does Europe have a huge debt crisis when in many countries the debt levels aren't that high and interest rates aren't that high? Because their economic growth has collapsed. That's what the congressman, with all due respect, has outlined. That sort of inflation, over-focus on inflation. The Fed has a dual mandate. That dual mandate needs to be followed. It hasn't been, I think, enough up to this point.
Well, I would tell you I have to disagree on a lot, especially on the characterization. The fact of the matter is I don't want this Fed to be the European Central Bank, but I do want it focusing on what it can actually achieve, which is a sound dollar, protecting the value of that dollar over time. The truth of the matter is what businesses are waiting for and seeking before they invest in the economy again is not more stimulus from the Fed. It is pulling back the Affordable Care Act. It's all the regulation coming out of Washington. And I think clearly it's a tax code that's broken and a big drag on the economy.
JP, let me just ask you to close down.
All right.
Do you think Janet Yellen will prolong QE3? In other words, take a longer time to end the bond purchases? And do you think she will take an even longer time to raise the short-term Fed funds target?
I don't. I wish she would. I don't think she will. I think there'll be some pressure to show that she is tough on inflation, but I think it's going to be data dependent. And if the data is weak, and it may get weaker if we have a debt ceiling crisis, then it's going to be a much longer time before we begin to taper.
All right, we're going to leave it there. Thank you, gentlemen. Congressman Kevin Brady and Jim Pethokoukis.